Welcome back. We have breaking news right now. The president just posted on Truth Social moments ago. He says, I am sending Tom Homan to Minnesota tonight. He has not been involved in that area, but knows and likes many of the people there. Tom is tough but fair, writes the president, and will report directly to me. Separately, a major investigation is going on with respect to the massive $20 billion plus welfare fraud that has taken place in Minnesota and is at least partially responsible for the violent organized protests going on in the streets. Additionally, the DOJ and Congress are looking at Congresswoman Ilhan Omar, who left Somalia with nothing and is now reportedly worth more than $44 million. Time will tell, writes the president. Meanwhile, there's this, 2026 starting with some volatility. Stocks holding on to gains this month, even though geopolitical tensions and tariff uncertainty, the rush to safe haven assets have pushed gold, silver, and copper to record highs. We are also hearing much expectation for a big boost in capital markets and investment banking, IPOs, and deal flow. Joining me now is Citigroup's Global Chairman of Banking, Leon Kalvareia. Leon, great to see you.
Welcome. To see you. Great to see you, Maria.
How would you assess the current market conditions in terms of deal activity? What are your expectations for 2026?
Great. Well, thank you for having me. A couple of things to think about. Firstly, if you look at the IPO backlog, there's probably at least 50 companies sitting in backlog that are going to get rolled out sometime this year. And in fact, if you listen to some of the rumors, whether it's someone like SpaceX or others, they will be incredibly large transactions. So the IPO market, if everything holds up, should be pretty robust. The second part about that is private equity needs exits. Their portfolios, I think, have an average life right now of 5.8 years. So they will obviously be a big supplier of IPOs in the market. And that in turn leads to M&A, where we had a strong year last year in the United States and globally. The market was up significantly with large transactions, and we do not see that holding up whatsoever. If anything, there will be more during this year, presuming conditions stay the way they are.
Yeah, I mean, the backdrop certainly feels good for IPOs and for deal flow. I'm wondering why we had a disappointment after the bank earnings. I mean, a lot of people were worried about all the spending. So, Leon, when you take a look at some of the spending that you're seeing in some of these companies, sure, we've got a big backlog and we're expecting a lot of business, but are investors focusing on all of the spending, particularly as it relates to data centers and AI?
Well, if you look at the spending in data centers and AI, you had Meta finance close to $30 billion. You had Alphabet finance close to $25 billion. There's going to be significant capital going into data centers over the next 2, 3, 4 years, I think the likes of which has never been seen. And that, in turn, is obviously going to help all the ancillary industries. Look at a company like Caterpillar, whose market cap, I think, exceeded $300 billion a few weeks ago. So whether it's construction, whether it's power, whether it's electrical, everything associated with data centers is going to have a very, very big impact. And I think at the moment, the capital markets are absorbing it, and we will see more to come here over the next few years.
I mean, we spoke with Jensen Huang when we were in Davos about the demand picture. The CEO of Nvidia is doing deal after deal. Some of them are these so-called circular deals, but he says bottom line is the demand is soaring. Watch this. Tell us about business and what you are seeing right now from customers.
We are seeing just incredible demand, and what's going on around the world is that AI, as you know, is a 5-layer cake. It starts at energy, then chips, the layer that we're at, infrastructure, cloud infrastructure, land, power, shell, building data centers, and then, of course, the AI models. This last year, AI startups, we call them AI natives, these startups raised $100 billion to build on top of the AI models. Their applications for healthcare, applications for drug discovery, for transportation, financial services, helping with making healthcare more efficient, all kinds of different applications. And so the demand is just incredible.
So, Leon, we're seeing this demand affect all sorts of industries. If you were to predict where you're going to see the most deal flow, I mean, I think the AI race has turned into a power race. So energy is real hot. You heard what he said about healthcare. And, of course, defense has been on fire. What would be the areas that you would expect the most consolidation or deal flow?
Well, I think healthcare is going to continue to see it right now. I think software, you will continue to see it, especially with companies that are going to be the absolute winners out of AI, because certain of them may not be. The energy sector is critical, and I think we haven't necessarily seen all the impact right now because demand is incredibly high. There are stresses on the grid, and all of these data centers being built are going to have to ensure that they have complete supply of energy. And obviously, as Jensen said, the demand for chips is incredible. And we have a number of clients that we don't need to get into here right now that are holding up supply of certain products because they don't have the chips. So all of these interrelated industries are going to continue on. I'm most bullish, frankly, in terms of what we're going to see in areas like healthcare, where I think we're just scratching the surface in terms of the impact on AI on both drug discovery and the impact on patients being able to determine focused precision medicine.
Yeah, on the capacity of chips, Jensen was telling me that it's about a year until you actually upgrade. So he was talking about the H200 chips that the president is allowing to be sold to China. And then you've got the Blackwell chips. And now he's on to his next chip, which is the Rubin chip. He's actually talking to customers about 2027 and delivering that Rubin chip. What are some of the concerns and the priorities that you're hearing in the boardroom right now from leaders and chief executives in terms of shaping that outlook?
I think the biggest concern that you would see, and frankly, that's in the context of a lot of positivity, and that is ensuring that their businesses have fully utilized the capabilities of AI. Number one, protecting their business model, but number two, ensuring that the efficiencies within their companies have been fully explored in terms of AI, whether it is back office, whether it's agentic AI, whether it's inside the office of the CFO. I mean, we have observed stuff both inside of Citi and with our clients that is stunning in terms of the usage of it and the usage and impact of how you can interpret the data. Because I think one of the other areas that people are now starting to focus is we actually have a lot of data. That's not quite the issue. The issue is interpreting the data and using it for prediction purposes. And I think that, again, is early days here right now.
What about the Fed, Leon? The economy is doing so well, expanding at the fastest pace in 2 years in the third quarter, driven by strong consumer spending, AI investment. But the Federal Reserve is kicking off its first meeting of the year tomorrow. We're expecting that the Fed holds rates steady after 3 rate cuts, but we're going to be waiting on President Trump's decision on the next chairman. What's your expectation for the Federal Reserve and the economy right now?
Well, look, obviously we ended the fourth quarter with fantastic growth rates here right now. The momentum continues to be strong. The president has a number of great candidates for the Fed, and he'll make his announcement when he's ready to do that right now. We anticipate that you will see a continued rate cutting cycle here in the economy going out with 3+ rate cuts during the year and perhaps more. I think the consumer remains relatively resilient. The impact of the tariffs, as you know, has been relatively mild. So our outlook is positive. That includes both the equity markets, the deal markets, the IPO markets right now, and the consumer will hopefully hold up.
All right. We will be watching all of that. Leon, great to see you. Thanks so much.
Thanks, Maria. Be well.
All right. Leon Kalvareia from Citi. We'll be right back.